Good afternoon, everybody. This is Anne-Marie Staines. I would like to welcome everybody that is here already to the St. Kitts and Nevis Bar Association Continuing Legal Education. Mr. Byron Kennedy is our host today. He's our presenter. He's a senior project specialist at the Eastern Caribbean Central Bank. He has been with the Eastern Caribbean Central Bank for the past 22 years, and most of his service was with the bank supervision department, serving as director from 2010 to 2016. Mr. Byron now serves in the governor's immediate office as a senior project specialist and is currently charged with the responsibility for several projects, including the Eastern Caribbean Currency Union Credit Bureau project and the ECCU Deposit Insurance Project. He's a national of St. Kitts and Nevis and holds a Bachelor of Science Accounting degree with honors and an MBA in finance.
Thank you very much for the kind introduction. I hope that I'm on for the others because your screen is freezing up.
We can hear you.
Yes, sir. Continue. We can hear you.
Okay, thank you very much. Yes, so let me start off by, on behalf of the Executive Committee of the ECCB, to thank the St. Kitts and Nevis Bar Association for this opportunity to discuss the ECCU Credit Reporting project, which includes, of course, the Credit Reporting Legislative Framework. What I propose to do is to go through, I'll do a background of the entire project thus far, and I will provide the objectives of having an official credit reporting system. And then we'll move into the legislative framework itself and conclude. And then we will open up for questions and answers. By way of background, the work towards the establishment of the ECCU credit reporting system, it actually commenced as far back as 2009 as part of the World Bank Group Caribbean Credit Bureau project. And the objective really of the project is the establishment of an adequate legislative environment to facilitate the operation of an advanced credit reporting system. Now, according to the World Bank, credit reporting systems can be classified into 3 different networks. One, a credit registry, which tends to be public entities managed by bank supervisors or central banks. 2, a credit bureau. And 3, commercial credit reporting companies. Such companies like Equifax and Experian. Yeah, but for the purposes of the ECCU financial system, the operation of a credit bureau is the best fit. A credit bureau can be defined as a business that maintains historical credit information on individuals and businesses. Information received from lenders and other sources are compiled in a credit report that includes a credit score. Now, credit scores apply to individuals and small owner-operated businesses, while credit ratings apply to corporations and governments. In terms of the consultations that were carried out in developing the credit reporting legislative framework, it was held with relevant ministries of the member governments, with credit information providers and designated credit information providers. And so the ministries of finance and the offices of attorneys general, the credit information providers such as licensed financial institutions under the Banking Act, money services businesses under the Money Services Business Act, credit unions, insurance companies, and microfinance companies. And then in terms of the designated credit information providers, we have telecommunications providers, electricity services companies, water and sewage corporations, development banks, and hire purchase companies. I must tell you here that in doing the consultations, there was the constant question about why the exclusion of development banks from the mandatory group. And so we are in fact consulting with the licensee regarding their experience in the other countries that they have established operations. And we will then determine whether or not there would need to be some special facilitation for having development banks included as mandatory CIPs. The Monetary Council approved the ECCU Credit Reporting Bill as far back as in March 2017. So needless to say that the establishment of the credit reporting legislative framework has been protracted. To date, the bill is yet to be passed in Anguilla and St. Lucia. Also, the commencement order has not been published in the Commonwealth of Dominica and Montserrat, and proclamation is outstanding in St. Vincent and the Grenadines. The regulations have been issued by Antigua and Barbuda, Grenada, and St. Christopher and Nevis. In the meantime, the ECCB continues to develop a credit reporting regulatory framework with technical assistance from Compete Caribbean. We have produced a supervisory manual and prudential reporting schedules as required by the Credit Reporting Act, and we have trained staff in credit reporting regulations. Another aspect of the project is public awareness and education. And we have been revising credit reporting communication strategy with the assistance of technical support from Compete Caribbean. And we are preparing for a rollout of this revised strategy in January 2022. Now, in terms of the objectives of an official credit reporting system, the primary objective of the system in the ECCU is to enable official credit information sharing, which will likely result in the timely sharing of relevant, accurate, comprehensive credit information, be it positive or negative information. This is not what necessarily obtains in our space at this time. For instance, we have cases where institutions would facilitate the offloading of less than desirable customers to other institutions by providing all positive information. And so the timely sharing of reliable credit information over a sufficient period of time will likely facilitate the buildup of solid credit history on data subjects. And timely access to such information should result in more objective credit decision-making and more speedy credit decision-making, impacting lending terms and conditions such as loan period, principal amount, interest rate, etc. So if you have a higher credit score, it is likely that you will be in a better position to negotiate with the institution, or the institution will have sufficient information on which to price your loan based on what they have before them. And that is something that will benefit both borrowers with good standing and the institution in terms of the time and information that they have to make their decisions. Whereas risk management is expected to improve via enhanced credit monitoring and enforcement actions. Again, where lenders will have reliable, holistic information or consolidated information on a borrower in a timely fashion, this should lead to efficient remedial actions. So for instance, I may have a loan at the credit union, and I may also have two other loans at to other lending institutions. But the credit union that I have this loan with, if I ask for an additional amount, they would be relying mostly on what they have, my business with them, right? But if they can, at push of a button, get information, up-to-date information on me to alert them as to what is happening with my lending at other institutions, then it would really put them in a position in which to make the decision whether to increase the lending or not. And also, on the other hand, if I am in arrears at that institution and I'm also in arrears at the other institutions, then they would increase the monitoring. They would more than likely speed up the remedial actions. Data protection and security is a critical aspect of credit reporting, and certain requirements of the Credit Reporting Act focus on this objective. The Credit Reporting Act also provides adequate regulation and oversight of credit reporting system participants, and for a single space for regulation of credit reporting systems. That is, a licensed credit bureau can operate in any ECCU member territory, provided that it is properly registered and the legislation is in place in that member territory. Accurate credit information is also key to supervision of financial institutions and to the overall financial stability of our system. So supervisors can get non-personal information. They can view trends in lending at certain institutions and compare that to the overall lending trend, etc. And that will certainly help them in carrying out their responsibilities. Credit bureaus operating without an official legislative framework have mostly resulted in issues of participants either reneging on certain responsibilities or failing to fulfill those responsibilities in a timely manner, which adversely impact the operations of the credit bureau. Hence, the international momentum for established credit reporting legislative frameworks. A credit bureau was just recently established in Barbados, in fact, in 2019. And the absence of that legislative framework resulted in certain issues that we mentioned, that was just mentioned. And hence, various stakeholders have been pushing for the implementation of a credit reporting legislative framework. As we speak, a bill is being considered for passage there in Barbados. The ECCU Credit Reporting Act and credit reporting regulations, they are the key pillars of the ECCU Credit Reporting legislative framework. And the Credit Reporting Act comprises 11 parts. So part one, we will go through key concepts. I think it's important to set the context by zeroing in on some of these. So in terms of credit information, that means any positive or negative information bearing on a data subject's credit worthiness, his credit standing, capacity, character, general reputation, personal characteristics, or mode of living, including but not limited to the history or profile of the data subject with regard to credit, regard to assets, and regards to financial obligations, meaning that it goes outside of the quantitative aspect, and we will have other information on personality and characteristics, etc. That is provided by these modern credit institutions, credit reporting institutions, credit bureaus. So in terms of negative information, that will include credit defaults, collections and late payments, conviction for fraud, forgery, receiverships, bankruptcies, any other kind of act or information which could cause a decline of the credit application or an amendment of the application. And positive information, as you would figure out by now, any information relating to the current or historical status of credit transaction, such as account opening date, the loan amount, the date of last payment, payment history, etc. Now, a credit information provider means a person that gives credit information on a data subject to a credit bureau, right? So we will speak to them later, but we alluded to it earlier in terms of the licensed financial institutions, credit unions, etc. A credit provider includes a person that carries on a business involving, one, the provision of credit to another person. So that is goods or services extended prior to receipt of payment. And two, the selling of goods on hire purchase or credit sales under the Hire Purchase Act. And any other entity designated as a credit information provider under the Credit Reporting Act. Now, in terms of the credit report, it means a comprehensive account prepared by a credit bureau. And this can be in electronic or hard copy format and includes personal identification, which is critical, and the credit information on that data subject. The credit reporting service includes the receiving, compiling, storing of credit information, and the eventual ultimate issuance of compiled credit reports. Now, credit score means information processed by a credit bureau that is used for evaluating the probability of a data subject fulfilling its financial obligations associated with a loan. Now, that is usually captured via a number scale. The data subject includes any person whose information has or may have been furnished to the credit bureau by reason of a contractual relationship with a credit provider, a loan application signed by the person, or any other legitimate purpose. That is one. And the other would be a person who is a guarantor of a borrower or a beneficiary of credit. So any persons who receiving credit in any way, whether you pay your rent at the end of the month, so therefore it's essentially credit that you're being given by the landlord, and any person who is guaranteeing that you will pay that rent is also one to be deemed a data subject. A subscriber means any person who is entitled pursuant to a subscriber agreement or under the Credit Reporting Act to receive credit reports or value-added products from a credit bureau, right? So a subscriber can be a credit information provider, which can be a bank, and a bank is also a credit provider because it issues credit, right? And it can also be like what we just spoke about, a landlord or a prospective employer who is trying to ascertain the character of the person that they want to try to give an opportunity to work for them. And then a subscriber agreement provides a credit information provider or a subscriber with the terms and conditions upon which data subject information may be disclosed to or may be accessed from a credit bureau. So that agreement outlines all the terms and conditions that all parties attached to the agreement would be bounded by. So part 2 of the Act speaks to the administration, and it essentially outlines the powers, duties, and functions of the central bank. So the central bank is essentially responsible for the overall management of the Credit Reporting Act and day-to-day administration, supervision, and implementation of the Act and regulations. Part 3 speaks to the licensing of a credit bureau. And in our case, the central bank would have determined that at this point in time, one credit bureau would be adequate enough to carry out the required services. However, the Act allows for more than one credit bureau to operate in this space, right? So in terms of the conditions for the license, no credit bureau can operate in our space without a license. And then there's specific application materials, like we have startup capital may be prescribed. And in the case of the licensee that we have in our space now, they were required to bring startup capital to the table. We have credit bureau must provide a tentative schedule of fees for its product and services to the regulator, the central bank, and the shareholding of all credit information providers would be capped at 49%, meaning that a credit information provider is allowed to have ownership in the credit bureau. However, no one single credit information provider can have more than 5% ownership. And all the aggregate holdings of the credit information providers cannot pass 49%. And in terms and conditions of a license can be amended with notice to the credit bureau. So the central bank can amend the terms and conditions after he would have issued the license, but would have to give 14 days minimum notice to the credit bureau for the credit bureau to exercise its right to make representation respecting the proposed amendment of the terms and conditions. Now, a licensee is required to display the license prominently in its place of operations. It cannot transfer, sell, or lease a license without the approval of the ECCB. In terms of the payment of fees regarding licenses, we have non-refundable application fee. So those applicants had to pay a fee without any refund. And then there is a license fee that was issued. And then there is annual license renewal fee and also a reinstatement fee. So if by any chance that a central bank would have revoked or suspended the license of a credit information, of a credit bureau, there is a reinstatement license fee. In terms of material changes in circumstances, if a credit bureau undergoes any material changes in circumstances, they have to get the written approval of the ECCB for instances such as merger and consolidation, change of name of applicant, engaging in any business other than that of a credit bureau, and change in majority shareholding, of course. Then in terms of penalties, such penalties, example for operating without a license, not complying with the terms and conditions of license, penalties can be issued for such. A license may be revoked as a consequence of false information, operations not commencing within 12 months of issuance, incompetence, misrepresentation, etc. So those are the causes for the revocation of a license. In terms of part 4, we have credit reporting activities. Activities of a licensed credit bureau, again, we mentioned already, to collect and store and organize and produce reports and correct information, to provide training and educational materials, and also to conduct research on their own and provide statistical reports to governments, to regulators, and other institutions that require information on trends, etc. And also in terms of value-added products, these may include instant decision modules. Those are automated decision engines, and then monitoring. So there's a function that allows a subscriber to monitor the credit bureau database for specific predetermined types of data changes regarding their own data subjects. Yeah. And then you have electronic know your customer, etc. So those are value-added products that really will bring a lot of information to the space that at this point in time we don't have access to. So the consent of data subject, this is very critical. So anyone inquiring on the credit information of a data subject must first obtain consent of that data subject. So if I'm a landlord and I want to inquire on a data subject, someone who's trying to rent from me, I first must have that consent of that person before inquiring on the credit information of that subject. Yeah. However, credit information providers may disclose credit information to a credit bureau without first obtaining consent from the data subject. So when it comes to credit information providers providing information to the credit bureau, they can do so without first obtaining the consent. However, they have to give notice to the data subject through one or more appropriate means. So I think for some institutions, they may have that in the loan application form. They may also wish to post a notice at their place of business or on their website that that is the case, that they would be sharing information on you to a data, to a credit bureau. And the consent can be collected through electronic or other means, as long as the evidence is preserved. And the consent is valid for a period of credit agreement. So whenever that data, that agreement is over, the loan agreement, whatever, that is the end of the consent period. There are certain reasons for obtaining report without consent. So the Credit Reporting Act provides for that. So there are certain law enforcement areas that, you know, with no consent of the data subject will be required. And then investigations in terms of fraud and so forth. And then you also will have to depersonalize the use of information for research and stats. In terms of the credit reports cannot include judgment data unless the report also includes amount, age, name, and address of that judgment creditor or the agent of that judgment creditor. No information on race, religion, creed, ethnic origin, political affiliation, etc. is to be included in a credit report. And no information that is older than 7 years should be in a credit report. So once you've reached that 7 years, of having information on arrears that you had default, that will be then extinguished. The credit bureau cannot provide lists of good borrowers, and that, of course, will create some issues. If you have a credit bureau just providing all good borrowers, then there'll be a race for all these good borrowers by everyone. And then you cannot omit any reportable information, be it positive or negative, from a credit report. The onus is on the credit bureau to ensure that all information is accurate, timely, and sufficient. And data quality control and management. So in terms of the data validation, checks and formats, etc., that is the responsibility of the credit bureau. And then in terms of the standards of security and reliability, the Credit Act is very clear on the requirements of the credit bureau. So in terms of physical and organizational and technological security, in terms of the policies and procedures that they have to ensure that all these security measures are actually being carried out by who they want to carry them out. And then risk assessment and mitigation plans for the eventuality of breaches and hacks, etc. So now we move to permissible purposes. A credit bureau may, with a data subject's consent, provide to a subscriber a credit report or value-added product in respect of the data subject on the basis of information contained in the credit file of the data subject. So again, it's for an application for credit. It's also for a guarantor of an application for credit. And then it's used in connection with the purchase or collection of a debt of a data subject. So that is permitted. The entering into or renewal of a tenancy agreement with a data subject. We spoke about renting of property, etc. The underwriting of insurance involving a data subject. So that too is something that is used in all these other countries. And that can benefit you if you have good credit scores and so forth. Your premium might be lower than someone else with a low credit score. And then in terms of pre-employment check of a data subject for a position that entails significant financial responsibilities. So that can be used there as well. Periodic monitoring and risk assessment purposes, and also for skip tracing and collection of debt, and any other purposes that may be provided by the regulations. An inquirer of credit information must submit sufficient information to the credit bureau to enable the credit bureau to confirm and validate the identity of the data subject and that of the inquirer. So it is important that the inquirer provides this type of information that would validate his own identification and that of the data subject to the credit bureau. And he also must submit evidence of the data subject's consent, right? And then must agree to properly dispose of data subject information so that the information cannot be easily read. So now in terms of the rights of data subject, the Credit Reporting Act outlines the rights of the data subject. The data subject has to be informed about the contents of credit reports or credit information that was issued on them. And they can request corrections to erroneous data, right? And the process of correction is detailed in the regulations. The data subject has access to one free credit report per annum, and all other times that will be for a fee, right? The report, once requested, should be delivered within 3 days. Now, in terms of other provisions, information not to be disclosed 7 years after termination or settlement of credit. Information may be retained in excess of 7 years, but only for research, statistical purposes, and in a depersonalized form. The central bank may provide detailed guidance on the retention periods. And now, in terms of credit information providers, We have mandated and designated. We went through the mandated information providers already, and then the designated credit information providers include telecommunications, public utilities authority, the development banks, and any person carrying on business or selling goods on the hire purchase or credit sales. And so those companies incorporated under the Hire Purchases Act. Now, the duties and obligations of credit information providers. Upon providing credit or entering into a loan agreement with a data subject, a credit information provider is required to provide a credit bureau with information on the data subject from the date of the provision of the credit and within the time specified in the subscriber agreement, and is responsible for providing a credit bureau with timely, sufficient, and accurate credit information respecting to data subjects. And this should be done at least once per month. The credit information provider is obligated to submit and update all data subject information to the Credit Bureau in accordance with the Credit Reporting Act and regulations, and required to comply with the security standards and measures prescribed in respect of data information in accordance with the Credit Reporting Act and regulations. So other requirements include the types of information to be provided to the Credit Bureau, such as data subject identification, positive and negative information, and required to provide adverse action notice within 30 days to the consumer in cases of information obtained from a credit bureau. So if a credit information provider seeks information on a data subject and gets information that results in the credit information provider taking some adverse action, either declining the credit or changing the terms and conditions of existing credit, that a notice will need to be sent to the data subject. All right, and the notice will need to include reason for the action, the credit bureau that the credit information provider received the information from, the contact details of that credit bureau, and the rights to dispute. So they have to give information to the data subject on his rights to dispute. And the data subject entitled to a free report in case of adverse action. So anytime there's an adverse action involved, the data subject is entitled to a free report. In terms of dispute resolution, the resolution of disputes or complaints regarding credit bureaus, subscribers, and data subjects are provided for in the regulations. A data subject may dispute the accuracy of information produced in a credit report, and the regulations provides for conciliation, mediation, and other dispute resolution techniques to be used by the credit bureau and by the central bank in resolving complaints and disputes. Now, in terms of cross-border data flows, again, that was highlighted as a concern while we were doing the consultation for the legislation. But with the approval of the central bank, a credit bureau may, in accordance with the regulations, outsource the processing of credit information in its possession or control to an entity based or operating outside of the currency union. In our case, the licensee has received the ECCB's approval to store data, and it's at its data center in Jamaica. And there is where it also hosts data for its operations in Guyana and Barbados, right? So prior to approving cross-border data flows, in the case of the Credit Info ECCU Limited, the central bank ascertained via an assessment that the credit information be properly protected as required by the Credit Reporting Act. Now, in terms of the tools for the central bank, the Credit Reporting Act outlines the tools here as information gathering. So the central bank has the right to gather certain information through periodic reporting, books and records, inspections. So it can go on site, it can enter the premises and carry out whatever search. Orders to amend, delete, not share information and inquiry. So it can also issue orders to Credit Bureau. And the audited statements and annual reports, including compliance reports and et cetera, would be reported to the central bank to aid the central bank in carrying out its duties in ensuring that the credit reporting system is in fact properly regulated. And then there is an opportunity for the central bank to appeal to the High Court in case of non-compliance. Then there is civil liability. So liability for non-compliance leading to injury, damage to the data subject. And so actual damages and plus cost of the action is included in that. So in terms of the burden of proof, that is on the credit bureau or the credit information provider, as the case may be, and to prove that the source of the error was not with them. In terms of the review commission, that's part 7, we have independent mechanism to resolve disputes. So there'll be an appointment of a review commission by the minister, and the commission will review disputes by credit bureau and data subjects, or between credit bureaus and data subjects. And there's a fee for the review, and the credit bureau and the data subjects, they have the right to refer to the High Court. Yeah, and then in terms of part 8 speaks to appeals. So after the central bank and review commission, there's an appeal to the High Court step that is available in the Credit Reporting Act. And then the Court of Appeals, in accordance with, will work in accordance with civil procedures law. Then part 9 gives a miscellaneous outline of stuff. So agreement with other regulators and central banks, it provides the authority for the credit bureau and the central bank to, make such agreements. And then the general offenses and liabilities, those are outlined. The penalties are also outlined under this part of the act. Liquidation of the databases. So it addresses if there's an instance of a liquidation of the credit bureau database, what should happen. And so it speaks to the regulator taking charge and giving instructions and so forth, and possibly holding the information for like a 12-month period before putting it over to another credit bureau, in which time it should have already had in place. And then finally, the regulations that the minister may make is also addressed in the miscellaneous section. Then the schedules to the Act speak about public registers, such as National Insurance Scheme, Social Security, the companies and intellectual property registries, titles, births and deaths registries. So those are sources that the credit bureau can actually tap in building up credit information on data subjects. And then the National Review Commission Constitution and rules of operation. So that is the process outline for that particular operation. And then it speaks to the regulations. And the regulations outlines the licensing requirement again, the complaints and disputes, obligation of credit bureaus, fees, subscriber agreement, etc. And in conclusion, it's just to say that the ECCU credit reporting legislative framework is being established to facilitate the operation of adequately capitalized, modern and efficient credit bureaus, which should result in reduced information asymmetry, increased financial inclusion, more efficient and accurate credit decision-making processes, enhanced credit monitoring and risk management, and economic growth and development. And so we have reached to that stage where I say thank you and invite questions. I should have one or two colleagues online here where if I would be in some problem in answering a question, they can assist. Thank you.
Thank you, Mr. Byron. Any questions? Okay, Mr. Byron, I have a question. The pandemic has had a significant impact on individuals and small businesses. Many persons have lost their jobs and will not be able to repay debts. Are there any concerns about implementing a credit reporting system at this time in light of the possible implications for the significant number of persons, in particular whose credit records may have been negatively impacted as a result of the pandemic?
Yes, that's a pretty tough question. However, that was in fact taken into consideration. The fact is that the ECCU is really playing catch up in terms of ensuring that we have an official credit reporting system in place. And if that we have a deterioration in the credit of a number of borrowers in our space does not negate the urgent need for establishing a credit reporting system. In fact, once that credit reporting system is in place, it would safeguard both the institutions, the credit providers, and also borrowers, because I may be in a position right now to go and get a loan from an institution that is probably trying its best to get loans at books, right?
Yes.
The required credit risk management in terms of getting all the information necessary on me. However, now one push of the button and all the information on Kennedy Byron comes up in terms of where I have borrowings in this space, right? And that will then stop me from putting myself in further debt that I cannot repay. And it would also help the institution from extending monies that they probably would not be able to recoup, right? And on the other end, the depositors' funds that the institution would be lending to me, those depositors' funds would remain safer with the institution than with me here. So that is the philosophy, really.
Okay, so currently now when you go to different financial institutions and they are like collect, like they ask you like, do you have any loans with this facility or that facility? Is it that everybody is now doing their own, even though they ask you, they're not really doing anything, nobody just they're just taking the person's word, and the credit bureau is trying to eliminate that?
Right. Well, there's an unofficial system in place where if I go to a licensed financial institution, a commercial bank, and seeking credit, they would call around, right, and ask for any information on me. But a lot of times, as I mentioned earlier in the presentation, where an institution where I have most of my business, and that institution would want to really cut ties with me, right? They may provide more positive information on me and, not give the full story. And I may have one or two other credits in a credit union, a small credit union somewhere else and so forth. But if all these credit providers are actually contributing information to the credit bureau, my consolidated status and my character, my willingness to repay, and all these things are would be captured in a credit score, right? And apart from the credit score, you will have a credit report on me. So that is, to our mind, a lot better position to be in now than then. And also, I must add too that there would be some discussions in terms of how far back we should go in creating the credit history, right? And discussions amongst the regulator, the credit bureau, and the credit information providers. So it's not just like cut and dry. And from what I understand too, the credit bureau, they also, based on what's happening in other territories right now where they're operating, they have been applying some sort of mathematical calculation to these ratings to actually account for or include what's happening as a consequence of the pandemic.
Thank you. I see your hand, Sherry and Liburn. Charles?
Hi, good afternoon. Mr. Byron, I had two questions, if you would allow me, please.
Sure.
The first question is, in terms of persons who have existing facilities, let's say mortgages, is it a situation where the persons with existing facilities will now be brought into the system, or is it a situation that only those persons who are now borrowing would be subject to this credit reporting? And the second question I had, would borrowers now have like ratings like what they have in the US? And is it a system now where you have a rating, I'm just saying, let's say 1 to 10. And if a potential borrower falls, let's say in a rating of 3, would the financial institutions be barred, or like, would they be in a position where they couldn't lend funds to those individuals? Or would it be a situation where the information is really for risk assessment? I'm just trying to get a sense as to how influential it would be, and whether that influence is more of a business decision, or whether or not, the EC Bank is encouraging the banks to not lend to persons, for example, with their ratings, below a certain number. I'm not quite clear.
Okay, thank you very much for the questions. In terms of the first question, yeah, what the credit information providers would be required to do is to provide information on all their borrowers, be it new borrowers or existing long-term existing borrowers, right? And so that is a build-up. It would have to be done. It would not just take information right off the bat and then they give you a credit score. So you'll have a build-up of information and a build-up of a history for you, right? And then based on that history and based on the information within the history, they would be able to then apply a score, exactly like what you said. It would be a number on a scale, right? And that would not suggest that if you have a 3, if 10 is the best, that you would not be considered at all. What it would suggest is that it would give a prompt to the financial institution to actually price you a little higher, because you would then represent a little more of a risk, right? And so that, and then it would also have other information from which to determine how they deal with you, because you may have, as I indicated earlier, there are certain products that they value-added products that the credit bureau provide, and in terms of your personality. So you may have fallen on rough times recently, but you would have demonstrated before that you have the willingness to repay, you have that sound character, etc. So those things will also be used by the financial credit information provider, or the credit provider in this case, sorry. Yeah, so thank you very much for the questions. Yeah.
Thank you, Mr. Byron. Denise?
Hi, good afternoon. I have a couple of questions. One, I heard you talk about banks and credit unions, but of course we have several non-bank and non-credit union lending institutions. Here, Courts is a lender, and there's several others who are not within that bank area. So would this apply to those non-bank, non-credit union financial institutions? So that is one. My other question, in terms of your credit rating, would it have like different grades for different kinds of obligations? For example, I'm familiar with a lot of people who stand as guarantors for student loans, and persons come back and they're paying, and the guarantors have no idea when they stop paying until they go to get a loan for themselves, and then they have this humongous set of arrears, and they have to, that they didn't know was there, so they have to make arrangements, and it puts them in quite a difficult situation. So I'm wondering if there is a way to make, or if this credit reporting bureau would make a distinction in terms of how people accumulate their bad credit. As I said, sometimes they were doing a good deed and they got shafted. So that is one. And the other, I would like your idea, I guess, of your institution, of the state of our lending here. My impression is that people complain that the banks are not lending. And it seems to be a situation not just in St. Kitts. We heard Mayor Motley complain that the banks are security guards if it was money. And do you see that this would be a situation where it would encourage lending, or would it further discourage? Because without credit, the system sort of gums up. So can you give your impression on that, please? Thank you.
Okay, thanks very much for the questions. First up, in terms of the non-banks institutions such as the courts, etc., those will be captured as well. So I think we have that being in the designated category. Yeah. So hire purchase companies. So that will be in the designated company category. And in fact, based on our discussions with the credit bureau, they would have had that sort of information provision from companies such as courts, etc., in the other territories where they operate in. So that will definitely be covered. You had like fast cash, those same day loan stuff, and so all those are being covered by the legislation. Yeah. And then in terms of the various categories, that is really something that would be discussed with the credit bureau and the credit information providers going forward, right? So in terms of what type of information will be used, because I know that that is such a sad case. I know of a few cases well in that guarantors stuff. So discussions would be had on those things there. Yeah, and then in terms of the state of credit, I would venture to go as far back as 2010, 2011 here in our space, where once the consequences of the global financial crisis came to our shores, we had, as you know, a couple failed institutions, right? And consolidation of banks and banks leaving, etc., right? Because, and also we had a whole revamp of the credit risk management by lending institutions, right? We had upgrading of the legislation, Banking Act, etc., right? And then this was is reflected in terms of the more stringent credit risk management that has been reflected over the years in terms of the banks being more careful in terms of the credit issuance, right? And I'm thinking that because on the other end of it, in the real sector, we have not had an opportunity to pull ourselves out of those sort of days, and then now being hit with the pandemic, right? So the real sector is not providing the kind of opportunities, lending opportunities either, right? So, however, what I can say though, based on the literature and based on what we know, what we have observed, is that wherever a credit bureau has been established, credit extension has increased. Yeah, but all things being equal. Yeah, so once the economy starts to really get some sort of meaningful growth, you would expect that is what banks exist for, to, you know, unlend, but they have to do so more carefully because we have had those cases in recent years. Yep. Thank you very much.
Thank you, Mr. Byron. Garth?
Good afternoon, Mr. Byron. That was an excellent presentation. I just have a quick question. Is there any plan for the ECCU to collaborate with the other Commonwealth Caribbean jurisdictions to share credit information? For example, between the ECCU and Barbados, Trinidad, Jamaica, etc.
Yeah, that's an excellent question, Garth. And I've heard that being mentioned, right? But I'm thinking that we wanted to ensure that we have operations here in the ECCU first, right? And it would not be far-fetched given that the licensee that we have here, Credit Info International, they have operations in Jamaica and in Barbados, and they have in other areas in the Caribbean. So I'm thinking that that is something that can be done. However, it has not gone beyond the suggestion phase. Yeah, so it's just being suggested that that is something that we should try to, you know, move to. Thanks, Gab.
Thank you. Any other questions? I have another one. We recognize the shortcomings of the data protection legislation in the region, in countries like St. Kitts and Nevis in particular, where the data protection legislation is not enforced. How will data protection and privacy issues be addressed in this framework?
Right, okay, thank you very much. A good question again. And I must say that the Credit Reporting Act, a lot of time was spent on those areas, right? To ensure that data protection and security is of utmost priority, because as we went around throughout the years discussing the legislation, that would have been an area that was brought up all the time. And so, as you recognize, the treatment of the data, right, and privacy issues, this is the onus is on the credit bureau to actually ensure that they protect the data. And so this credit bureau has gone as far as ensuring that they encrypt both information, both at rest and in transit, right? So even if information is intercepted, it will be unreadable to the intruder, right? They have extensive policies and so forth. They have the checks to be carried out by their auditors in terms of compliance checks, in terms of the compliance with the policies and the procedures and so forth. And the central bank as regulator would also be charged with ensuring that that is done, right? They have a data center in Jamaica that the Bank of Guyana, the Bank of Central Bank of Barbados, Bank of Jamaica, all those have been doing their own checks to ensure that the data is properly protected. And so we would have gone to Jamaica and did our own checks and so forth as well. And, we would continue to liaise as regulators. I think in the Credit Reporting Act provides for that in terms of having agreements with other central banks, etc. So that is one of the areas that we will continue to liaise with, our colleagues in the region in ensuring that that is the case. But, we have the Credit Bureau is really responsible for the physical, organizational, and technological aspects of the data to make sure that it is properly secured. Yeah. And I must add too that the credit information provider is required to comply with the security standards and measures as prescribed in the Credit Reporting Act. And then as we used to try to counter these concerns, banks, credit unions, etc., they have information for years that they're entrusted with, right? And they have legislation like the Banking Act and the cooperative legislation, etc., that would guide how they protect the data. And thus far, we have not had any massive issues with data, leaks or problems like that.
Well, thank you so much, Mr. Byron. Do we have any other questions? It seems that we have covered quite a bit in the time. Do you have any closing remarks, Mr. Byron?
Yeah, well, it's just to thank I think his name is Bar Association again for the opportunity to provide some clarity on these issues, and to say that credit reporting is an official credit reporting system is vital to our growth and development. We would definitely have credit inclusion. You spoke to whether or not, someone asked about whether this would see a decline in credit or the opposite. And so we expect, based on experience, for financial inclusion and for really all parties, all stakeholders in our financial system to benefit from this official credit reporting system. Thanks much.
Thank you. On behalf of the NIBIS Bar Association, I'd like to extend a warm thank you from all our members and today. It was indeed a great presentation. So thank you, and thank you everyone for tuning in this afternoon.